Alright, welcome back everyone to another video. I see you new subscribers. Thanks for watching my videos. Thank you so much for subscribing. Please, 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 if you have not already, please do subscribe. I appreciate it. I'm trying to, gain obviously as many subscribers as I can because the more subscribers I gain, the better I feel about making these videos, and I hope that people actually do learn something from them. So please do consider subscribing. Now let's get right into it. This is one that I have been intrigued by because recently I saw that Monster Energy has been the highest compounding stock in the S&P for like whatever it's been, like the last 10 or 15 years. It has been the largest like compounding growth stock in the entire S&P 500, and I did not know that. I knew about Monster Energy and Monster Beverage, but I just didn't know that it was that big. And it's like the Amazon of the drink industry, basically. And you'll understand what I mean by that in a few minutes when we get to the very end, because you will be very shocked as I was. So let's get right into this. Monster Energy, as of the close of March 5th, 2021, was trading at about $86.42. So that's with a price target of 103. That's almost a 20% upside from where it closed on March 5th. Now, Monster Energy has 14 analyst ratings, and 11 of them are for buy, 3 are for hold. So this is a strong buy, and it has a pretty big upside from where it is right now. I think the stock last split in 2017 for a 3-for-1, so that explains why I remember it being, I think, in the 2 or 300s, and like I said, now it's around like 86. So that makes sense. And the stock analysis is it's pretty average, pretty mediocre. Because again, this is an energy drink business. This is not a technology company like the last few that we've been looking at, where that makes sense. That they've been 9 or 10s. So anyway, that makes sense. It's not bad. It's just like, okay, the momentum is this one. Is probably not going to go down a whole lot, and it's probably not going to go up a whole lot either. Even though we saw a 20% potential upside. So let's get right into the fundamentals. Let's look at the income statement. They have slowly been growing their revenue each of the last 6 years. So for 2020, they hit almost 4.6 billion in sales, and with that, they actually have a net income of 1.4 billion. That is so big. That is a huge profit margin for a drink business. They don't have as much, expenses as I would have thought for the cost of, advertising and the cost of sponsoring people and the cost of like the whole bottling and cans and the whole factory and distribution. I was just so very surprised to see that big of a profit margin of about 1.4 billion. That's a lot off of 4.6 in revenue. So I was very surprised to see that. Now let's see. Their cash pile has also grown dramatically since 2015. It's like, it's not as much as 2015, obviously, but it's grown. It's back to the billions. So it's about 1.1 billion in cash that they have, and that's a good sign. And we'll look into how did that get to be so big compared to the year prior, so compared to 2019. Total current assets are about 3.1 billion. Total current liabilities is about 750 million. This is one of those strong working capital companies that I have brought up before. Like this is incredible. This is a really, really good position to be in to have 3.1 versus 750. So that's what we want to see. And then 6.2 billion in total assets versus only 1 billion in total current or total liabilities. So again, like 6 times more assets than they have liabilities. That's a really good sign. And their total debt, they do not have any. They do not have any long-term debt. That is the best part about this whole balance sheet, is that we do not see any long-term debt that could hold them down, hold them back, and make them, not, worthwhile in investing in because of high debt, high interest, whatever it might be. Let's go over to the the cash flow statement. And so we start out with about 1.4 billion in net income. And if we go down, we can see that, again, they don't really acquire companies. They last acquired in 2016, yeah, about 600, almost $700 million worth of something. I don't really know what that is. If you do know, you can comment down below. But either way, they do not have they do short-term debt issuances and repayments, but they do not have any long-term debt, as we can also see from the cash flow statement. So that is a huge sign that they are doing pretty well. This is also something interesting. They've issued, small amounts of new shares, but they keep buying back. This might be why they're actually worth so much, is because they buy back, around 600, let's just call it 600 million in shares a year. So that's really, that's a good sign. It means that they issue a few shares, then they buy back way more. They buy back way more than what they issue. So they're constantly shrinking the overall, their overall output in the market as far as how many shares are available to markets. So that's a really good sign. Again, I don't really see how the cash pile grew that much, but that's good. So we like to see that. And now let's get into a portfolio of Monster. So if you had invested in Monster at its IPO in September 1995, $10,000, then by February 2021, you would have $61 million. And this is exactly what I meant by this is like the Amazon of the beverage industry. Like, you just have gained so much, 41%. That's bigger than Apple or Microsoft from what I've seen. As far as companies that have almost a 30-year track record. This is a 26-year track record of growth, and just 41% compound annual growth over a 26-year period. What else can you invest in that gets you that kind of growth? And I don't know. Like I said, that's better than Microsoft and Apple. If you go back and watch my previous videos, so that's crazy. $61 million. And let's look at the annual returns too. This is what I was most surprised by, is honestly, over 26 years, your worst return would have been in 2008, when the whole financial crisis was going down, for about 24%. Your money would have gone down 24% when things like I said, like Apple, Microsoft, those go down in the 30s or 40s even at most. But again, over 26 years, and then, 2018 was not a good year. I don't know what happened to like the beverage industry in that year, but obviously something bad. And then this year, they're not really doing that great. But overall, look at that. You have double-digit growth basically in 26 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 out of 26 years, you have double-digit growth. 17 out of 26. If you wanted to do, like a New England Patriots kind of thing, which is, how many AFC title games did they make from 2010 to, 2020, then it's like, how many double-digit growth? Literally, they do not have single-digit growth an entire year in the 2010s up to 2020. And they have 2 years in that span that were negative. So 8 out of 10 were double-digit growth. That's insane. What a good short to medium term investment opportunity that turned out to be. So anyway, let me know what you guys think. Let me know if you're invested in Monster Beverage and what you think of this video, and let me know, just in general, what you think about, the markets what's going on lately, because it's been pretty crazy. So if you are watching this video in March of 2021, then, let me know what you think about the markets. So again, I will see you guys soon. Please subscribe and talk to you later.